When the pension system was invented, it was a social contract that said basically, I'm going to pay into a system that will allow those that are retired to have their financial living standard, and somebody will do that for me once I retire. Now, that's being felt as at risk.
So in Germany, for example, you have a situation where now literally 2 that are working are paying for 1 who gets a pension. If you look 2030, 2050, that's reduced to 1.3, and you see the issue.
Hello, we're all getting older. And if we're honest, the one thing many of us avoid talking about is pensions. But whatever stage of life you're at, the question of how we'll support ourselves later on affects us all. Across Europe and beyond, confidence in public pension systems is falling, and many people worry about whether the money they're paying in today will be there when they actually need it. So today we wanted to dig into the topic, taking our home Germany as an example. We're looking at why people feel uncertain about their future and why, despite these worries, so few are doing enough to save for retirement. Plus, we'll look at what can be done to bridge that pension gap. I'm Michael Steen, and welcome to This is Deutsche Bank, the podcast for news and trends shaping the world of banking and finance. Today is the 25th of November. Let's get started. Now, talking us through all this today are Christian Nolting, our Global Chief Investment Officer for the Private Bank, and Raphael Gasser, Head of Wealth Management and Private Banking in Germany. Welcome to you both. Let's get started then with Christian, first of all. Just thinking about pension systems, I think it's important to talk about the differences that there are in the big pension systems. There's on the one hand, a sort of market-based approach, such as in the Nordics, which is funded. On the other hand, other systems are essentially paid straight out of taxation. People paying tax today are paying the pensions of people who are already retired. And that's the case here in Germany and, say, in the UK. So when you compare the two, what are the challenges, particularly of the latter taxation-based system?
So first I was thinking, do I feel I'm getting older? I'm not sure. But anyway, let's not discuss this now. Let's look at the systems. The pay-as-you-go system certainly has a problem. I think when it was invented, so looking at Germany, that was already in the 19th century. So those population which is working is paying for those who are in retirement, which makes a lot of sense as long as you have your population pyramid working. If there is something which is not working, so demographics go into the play here, then you run into an issue. So in Germany, for example, you have a situation where now literally 2 that are working are paying for 1 who gets a pension. If you look 2030, 2050, that's reduced to 1.3, and you see the issue. So once it's funded, it's much better because then it goes to capital markets and there's a return. And that's the big difference. And that's why I think there's this massive discussion and maybe also a little bit of loss in confidence, as you're saying, in that system.
Right. So the very obvious problem there. Now, turning to Raphael, we did a survey, didn't we, at Deutsche Bank? And we asked in Germany some 3,200 people about their attitudes to pensions. And the big headline result was 83% of Germans now see the country's pension system as unreliable, which is a major drop since the last time the survey was conducted. What are the implications of that?
Yes, indeed, we did look at that, and the implications of what we found, I think, are interesting enough. They're universal implications. Fortunately, and that's a good thing. People are getting older. Christian has just said, people are living healthier lives, etc. And the pay-as-you-go system doesn't carry as far. And that's, I think, something that people have realized, with 83% of people actually thinking that the pension system will not reliably carry forward. Everybody wants to have a living standard guaranteed basically also when you're being retired. But only 1/3 of the people that we've asked think that they will be able to preserve that living standard. And actually for more than 50% of the population, retirement and the financial situation in retirement is a source of genuine anxiety. And I think they're correct because of exactly what Christian has explained in terms of the demographics and the implications thereof. Hence, private savings become very, very important. But here again, we have a gap between people are being aware that they need private savings in order to have that living standard when they retire. At the same time, we see that a large part of the population doesn't save at all. Another part, less than 50 euros a month. If you take these two populations together, it's less than half of the German population that does actually save to a somewhat significant degree. And it's also something that we think is linked to behaviors that we see with other topics as well. When the topic becomes complex and it has only long-term implications, as we see in other areas like, for example, health, then there is a gap between recognizing you need to do something and actually really action. And I think that's where we come in. That's where the financial industry can make a difference by providing tailored personal advice and helping people to navigate that situation.
Okay, so yeah, it's a problem for another day kind of thing that people think of.
Yeah.
There's another topic here, which is this idea of intergenerational fairness, which is about making sure that the pension provision is equal regardless of when you were born. I think our survey also showed that some 64% see younger generations as being at a disadvantage under the current system, which is not surprising after what we heard from Christian. So when you think about that, and if you look at also what's going on in Germany, there's a huge debate in the German government about pension reform, and that's one of the sticking points. So what are the options to make the whole system fairer that you see?
When the pension system was invented, it was a social contract that said basically, I'm going to pay into a system that will allow those that are retired to have their financial living standard, and somebody will do that for me once I retire. Now, that's being felt as at risk, and that has implications potentially on social cohesion. And hence, many people think that the intra-generational fairness isn't given anymore, and that there is also solidarity between generations. So when we've asked the people, 75% actually think that there needs to be reform in order to balance that out, because most people are convinced that the younger generation will pay in more than they actually will get out, particularly out of the first pillar, and hence again they will need private savings. Now, people have been asked, so what to do about it? There were different proposals that we've heard. 1/3 of the people thought that bringing in more people into the base, so for example, you have civil servants, but also self-employed that are not in the system, so to say, bringing them into the system, making the system more robust is one approach that was proposed. Another one was to have the minimum statutory pension basically elevated. Now, to be honest, that doesn't really solve the problem of demographics. When we've asked about people working until they're 70 years old, that was something that was broadly rejected. So that's something that people are clearly not willing to go along with. Hence, overall, we think there is a modernization required. There are different approaches to it, and I think we'll talk about one or the other later on. But overall, there is reform. There is I think a system that people actually think is very valuable, but it needs reform. It's not that people want to abandon the pension system that we have today, but we actually need to reform it.
Christian, coming back to you, I mean, we already mentioned that this is actually a surprisingly well-known problem, but so few people are doing anything about it. As already mentioned, like, you know, almost every third person isn't saving at all for retirement. How do you explain that disconnect?
I honestly, I think it's, to be very fair, normal behavior. So as Raphael was saying, where it's a complex problem in the future. So what you normally tend to do is, okay, I don't deal with this right now. Why should I do this? And that's the issue. And secondly, because maybe products were also very complex and not as transparent. So you should know what you want to achieve if it's a complex problem. And from that perspective, I think it explains it, although you would say why. So I think it's education which needs to be done. There banks come, or financial agencies come into play, I think, because the survey also showed that there's willingness to learn about it. So, and I think that's something which is very important to understand. Talking about it and then finding solutions. The good news is if you pay in small amounts, still you can make a return. And because the good news is normally it's a very long investment horizon.
You just have to start early enough, don't you? That's it.
You have to start early enough, but still, if you look last 50 years, for example, you have double-digit returns if you look at the MSCI World, despite all these drops in markets. And especially in Germany, people are a bit cautious when it comes to equities or to so-called riskier assets. And I think here education makes a lot of sense, and then the return is much better.
Okay, and whose job is that, the education, would you say?
I think, honestly, it's the financial industry which can help on the one hand with the products, but ideally also in schools, you learn a bit more about economy. Sorry to say, but I think that's something where we can do a lot, and we support this as well.
Okay. Any thoughts on that, Raphael, that you'd like to add?
I think it's very encouraging to see. So people are open, they want reforms, as we just elaborate. The second thing is that it's high on the political agenda. And the discussions in Berlin are interesting in many ways. Now, the so-called Frühstartrente, or a young starter pension, is basically one instrument where you have state subsidized, incentivized, €10 per child per month paid into capital markets, we hope. And obviously that will lead to compounding returns. Now, what's interesting is that is something that gets broad acceptance by people. So people think it's actually a good idea. The voters as well, which is important. Interesting enough, 80% of families would top up. So the €10, which seems a bit small,
Right.
actually becomes a larger amount, and something that is not to be underestimated, particularly when we compare with other cultures or investment cultures, to be more precise. In Germany, you don't really have an equity culture. So what Christian has just said, bringing financial education to school, but also having people experience the power of compounding returns early on through such a young starter pension, I think can really make a long-term difference to how people think about not only pension, but investing overall. And Germans are not saving too little, but I think they're not doing the right thing with their savings.
Okay, because classically, I suppose that we think of it's put it in a savings account, and that's seen as secure and safe.
Which often is eaten up by inflation.
Right, yeah. And then this idea of shares are risky, so I might lose everything, but that's where you mentioned that MSCI World, spreading your risk out can help mitigate against that. I mean, Raphael, talking about the German debate, do you think the government then can deliver on this? Is that what's your feeling?
I think it's obviously a very intense debate with bold ideas being discussed and also being necessary, being asked for by the public. But I'm optimistic because I think it's the right discussion to be had. I think we will see reforms in the third pillar for sure, so the private pension, so to say, and we will see better incentivation, not only the Frühstartrente, the young starter pension, but I think there will also be a reform of the so-called Riester product, which had capital guarantees underlying and typically rather high fees. I think we will see more flexible products, more efficient products with also a cap on pricing in order to make sure that you have a certain efficiency level across the board, also for the population that is maybe a bit less financially literate. So I think these are important things going in the right direction. One of the things that we will also see over time, I'm convinced, with the committee that will be put in place to look at further reforms, is then the second pillar, where in Germany we only have about half of the employees covered currently, or half of the companies covered by such a second pillar, basically a corporate pension account.
Oh wow, okay.
And that's another topic that is very important, that we have more coverage there and that we have better incentives as well. And it becomes easier from an admin perspective. So I think there's more to be done, but there are good discussions on the way, and I think this is crucial for the country in the next 2 years.
I mean, that's also quite a statistic, isn't it? So half of the companies are just their employees are relying entirely on the state provision, and there's no sort of top up through a company pension scheme. Yeah. Interesting. Which maybe is a question for Christian then, putting your global hat on. what can Germany learn from the rest of the world?
A lot, I would say. But so Raphael mentioned the third pillar. So if you look where we talked at the beginning at the pay as you go, which you could refer to as pillar one, then there's a second pillar where if you're employed, your employer is doing something with you, and then there's a third pillar, the private savings for your pension. So if you look at all three, if I may start with the pay-as-you-go system, for example, if you look at other countries like Sweden, for example, parts of this is now also in capital markets, and there's a return, right? So it's not so easy to do because think of Germany again. If you would just say we go all to capital markets, you might leave one generation out. Who should pay for it, right? So it would be extremely expensive. But maybe some parts are there in other countries or large parts, and they have returns. So Sweden, for example, if I'm not wrong, over the last 10 years have 4 to 14%, which helps, right? So the amount is growing. So if we move to pillar two, where you do something with your employer, if you look at the Netherlands and probably Sweden again, participation rate is very interesting. So in Germany, it's roughly above 50%. There, it's close to 90, 95%. And you might say, why? So incentivization can help, certainly. Transparency can help, certainly. And also, you could discuss what we call opt-out system. So you put, I wouldn't say to force people in, but you can say they can withdraw voluntarily. But it's just the other way
The other way around.
Now you can do if you want, but at the beginning, it's a complex system. You move it away.
Yeah.
So if you're forced to go in and can go out, it's just the opposite. And that was also, for example, Australia, one reason why this was massively moving up. Third pillar, I look at Raphael. Switzerland is a good example, where you can use the money also, for example, to finance the mortgage of your house. So it's more flexible and it shows something you are doing right now. It's also transparent. And I think, Raphael, at one point in time, you said there's a time where you like your pension savings, which was new to me as a German, to be very honest, sorry to say. But so that would be something where you can learn from other countries, and it's not easy to apply, but it's possible.
Okay, just on that, you mean so you have a positive feeling when you start thinking about your pension. That's a feeling we'd like to introduce.
Yeah, look, if I see it transparently, if I see the compounding effect,
okay,
right? I'm not. So you talked about anxiety at the beginning. This should go down, yeah, and that's a positive thing.
Fantastic. I mean, Raphael, we should say you are of Swiss nationality. I mean, in terms of lessons from elsewhere, do you have anything to add to that?
No, I think Christian has summarized it very, very well. In Switzerland, and I think there, as always, there can be things improved, but it is not uncommon that in your mid-20s, you start paying into the second pillar voluntarily on top of what your employer is doing, into the third pillar. I had pretty much complete degrees of freedom in how my second pillar is invested. So I did personally decide how the money is going to be allocated across different providers, asset classes, and so forth. In the third pillar, not that different. And when you look at that, and you have all the tax incentives, etc., there is really not much of a benefit to hold it in your own private deposit outside of a second or third pillar if I can follow a very professional investment strategy to my liking and I get a tax incentive on top. And then, of course, that, again, compounds, adds up. It allowed me to buy the first family home, counting it as equity to the mortgage. So these are all things I think that have contributed to Switzerland being a rather well-funded pension system.
If I may add, there's an economic advantage as well. Also, if you look at other countries, I think Netherlands, Sweden, if you look at the amount which is in capital markets compared to GDP, I think Germany is 10%, whereas Netherlands, Sweden is more than 100%. And there's a return on it. So it's also something very positive. Side remark.
Yeah, because over time, capital markets return higher. Yeah. Well, the whole conversation is making me feel like I should go back 20 years, but that's not an option. But thank you both very much. One thing we always ask our guests on the podcast is, what is one thing that you're dedicated to in your daily life? So if we can end with that, Christian, start with you.
My job takes a lot of time, but I love the job. So I would say I'm dedicated to it. That's a boring answer. But it's true. But on top of this, I think it's really taking care of my parents, to be very honest, that just moved to our area because they're also getting older. I think that fits nicely to
That's
this.
very
That was not on purpose.
Yeah.
And I think the second one is also I have 2 kids, 11 and 12, and it's a lot of fun to spend time with them and then to also make sure their future is bright, hopefully.
I guess they're getting a very good financial education. Okay,
I hope so.
thanks, Christian. Raphael, over to you.
The more boring part of the answer is to build the most beautiful wealth management franchise in Europe, hopefully, offering fantastic client experience, but also great opportunities for just everybody, all the colleagues in the franchise. The more personal answer is, I think the most important role I believe I have, and I think you alluded to it, is the role as a father. We have 3 girls at home, 7, 6, and 4. And I was just facing a trade-off between preparing for the day at work versus preparing my oldest for her exam today, which she didn't prepare for a week apparently. And it was an easy decision. And so I guess that's really where my 100% dedication goes.
Excellent. Well, I hope it went well. Thank you both very much.
I'll check.
And thank you for tuning into This is Deutsche Bank. If you enjoyed this episode, please do subscribe or leave us a comment and let us know what you'd like us to cover in any future episodes. We'll be back soon. In the meantime, take care and bis bald.